Hello and welcome to CMS Forex News. I'm your market analyst Nick Nassad. Today is Thursday, June 25th, 2009. Following the past two sessions of strong moves in the euro-dollar pair, today was less eventful with the pair sticking to a 130 pip range. Traders continue to look for direction for the pair, which is now caught between an upward sloping line of support and a horizontal level of resistance. The greenback gained at the beginning of the US session, but as US stocks advanced later in the day, the euro reclaimed the 1.40 area. The pound-dollar pair fell 220 pips from its overnight high near 1.6466, extending its losses after running up against resistance yesterday at 1.66. This pair has been stuck in a sideways range the past 2 weeks, with support in a band between 1.62 and 1.6250. After hitting support in that zone near 1.6230, the pair rallied about 140 pips today, implying that it is not ready to break out of its sideways channel. The pound was weaker overnight as London bank shares fell, increasing risk aversion during the European session. The pound yen here stalled its recent rally and fell 240 pips to the 156 area. In addition to weaker stocks in London, the pound was pressured by news of a rift between the Bank of England and the UK Treasury over new banking regulations. Higher U.S. stocks helped risk appetite to return in New York trading, so the pound managed to pare some of its losses as it did against the dollar. In the U.S., initial jobless claims rose 15,000 to 627,000 for the week ending June 20th. The increase surprised forecasts and shows that the labor market may not be stabilizing as quickly as the past several weeks of claims data suggested. The total number of people continuing to receive benefits rose to 6.74 million as well. The final version of first quarter GDP was revised to show a slightly slower pace of contraction than the preliminary release. Growth shrank at an annualized pace of 5.5% compared to the preliminary 5.7%. The revisions show that consumer spending, exports, and imports were a bit weaker than originally reported, but the drawdown in inventories was lower, which helped to increase overall GDP. The dollar was higher against the yen as there was an overall sense of a risk appetite following the Fed's announcement yesterday that pointed to an improving U.S. economy. The pair reached a high near 96.60 after a rally of about 90 pips. From there, the pair fell in the wake of the weaker than expected U.S. claims data, found some support, but then fell further down. That fall retraced 50% of the recent up move in the pair. The Aussie-US dollar traded in mostly a 100 pip range today, following a similar pattern as some of our other pairs that were being driven by risk sentiment. The pair dipped overnight, but as U.S. stocks rallied and oil prices rose as well, breaking above the $70 a barrel level for the first time in 3 days, the Aussie rallied. It ran up against the downward sloping line of resistance at the 0.8035 level, where it stalled its rally. Tonight, New Zealand will release its GDP figures for the first quarter, while Japan posts data on consumer inflation and industrial activity. Overnight, Germany releases its import and consumer prices. Tomorrow, the week will end with data from the U.S. regarding personal incomes and spending, a measure of consumer prices, and the final version of June's UMich Consumer Sentiment Index. And that wraps up our coverage today. Thank you for joining us here at CMSFX.com, and happy trading.